Hi there, this is the last video of chapter 3. And as announced, we will prepare adjusted trial balance using the general ledger that we've prepared over the past 2 chapters, chapter 2 and chapter 3. Okay, adjusted trial balance. And we've prepared already this set of items, ending balances. But we need to update a few of the items, such as cash is the same as before, but supplies is not 2,500 anymore. We know that it is, yes, 1,000. It is 1,000. And prepaid insurance is not 600 anymore. It is, yes, it is updated, and now it is 550. Equipment, did we change it? No, but we know that we remember that we indirectly reduced the value of equipment using which account? Accumulated depreciation account, right? And it's a contra equipment account, meaning its normal balance should be the other side of the equipment's normal balance, which is credit side, right? And where is it? Here it is. And we have accounts payable. I don't think its balance is changed. And we saw that we have several different, we remember that we had several different payables item, like 3. Let's see. The first payable I remember is insurance. Oh, interest payable. Okay. Interest payable, and payable is a liability item. So it should be on the credit side, yes. And then the next payable is, we have only 2 payables. Cool. Salaries and wages payable. Where is it? It is here, right? Really? We have only 2 payables? Interest payable and salaries and wages payable. Okay, fine. And then we have earned revenue. That's all for the liability items, together with the notes payable. Okay, owner's capital, owner's drawing, we had nothing about them. Sales, we know that it's updated, right? From 1,000 to, from 10,000 to here, 10,600. Okay. Salaries and wages payable, it's updated, right? From 4,000 to 5,200, right? Rent expense, it's not changed, but we happen to have a few different expense items. You remember that? Okay, like salaries and wages expense, rent expense. In addition to them, we had insurance expense, which should be on the debit side 50,000, and depreciation expense, which is to be on the debit side 40, and interest expense on the debit side 50, right? I think that's it. then why don't we calculate the debit total and credit total? Are you serious? The two are different? Oh my, I'm in trouble, right? Oh my, I don't like it. What's happening? Let's see. Cash, owner's capital, equipment, right? Notes payable, unearned revenue, 800. Where is it? Revenue. Oh, it's not updated, right? Hey, it's a good exercise, right? We can see that when debit and credit totals are not different, the two should we should double check if there is some error. Oh, the two are not yet the same. Then let's keep double checking. Notes payable 5,000, owner's capital 10,000, owner's drawing 500, sales 10,600. Cool. Salaries and wages expense. Salaries and wages expense 5,200. Okay. Insurance expense 50. Depreciation expense 40. Interest expense 50. Rent expense 900. Oh, it appears the two are there's nothing wrong with them. Then what's wrong with them? Am I seriously in trouble? I don't like it. I don't like it. What's going on? Some of them and the some of them. It appears that the credit is 1,700 higher than the debit side. What's going on? Did I miss something? Right? Did I miss something? 1,700-ish amount. Debit and credit being different means something is not recorded on the both sides, which amounts to 1,700. Okay, what's missing? Okay, it appears that we have missed preparing a posting accounts receivable here. Yeah, A5 accounts receivable, which is 200. 200 for October 31st, right? Okay, then. And also supplies. Did we change the supplies? Okay, we changed. Okay, then we need to add up one line item, which is accounts receivable. There it is, which is 200. Okay, and then we don't have supplies expense. We add up supplies expense, insert in supplies expense, which is 1,500, which is 1,500. So yes, we have the debit and credit the same. So we are sort of partly comfortable that the error, it is not likely we have errors in adjusting adjust trial balance or entire the recording process. Okay, we've prepared adjusted trial balance. Then let's prepare financial statements. We have done it already in the previous chapter 1, but we will be more detailed, preparing the financial statements using adjusted trial balance. The first step is preparing income statement. Okay, income statement, what is that? As we've discussed it, it is a statement that shows the changes over the past period about your revenue and expense. Okay, revenue such as sales. How much is it? We know that it is here 10,600. Then what kind of expense items do we have? We have these expense items. Why are we having? I will copy and paste rather than the entire cells, but we will copy and paste the values. Okay, so that we have all the values in. We have supplies as a group, and each of the items to distinguish the group title from the items. I will make a small indent. Okay, and then the values are here from 1500 to 900, right? What I did is I moved the pointer to the black box, right, of the activated cell. Then your pointer changes from white cross to black cross. Then you double click it. Then everything is automatically copied and pasted. Okay, and then our net income, which is sales minus total expense. By the way, how much is your total expense? The total expense is sum of all. And your net income is sales minus total expense, which is 2860. Okay, this is so-called your bottom line. The net income is your income statement. Right, then let's move on to the statement of owner's capital, equity. As of October 31st. Whoa, yeah. First to first. You have owner's capital at the beginning, meaning on October 1st, or at the beginning. And its balance is, we all remember, it is 10,000, right? Okay, and then what happens to our wealth? What happened to our wealth was we have an increase in our wealth. By how much? By net income. We have increased our wealth by the size of net income. But also, our company size has been shrunken by the size of owner's drawings. How much was it? Yes, 500. Meaning your owner's capital at the end of the period is, again, from the beginning, you add and subtract. Right? So you make a single underline and a double underline to make sure to make it clear that this is your bottom line. Okay. Right. Then let's move on to our balance sheet. As of October 31st. Okay. Balance sheet tells you assets equals liability and equity, right? Asset items are printed here. What's going on? We paste the value. And then this is the group title. These are items. Let's distinguish them, making a small indent. Okay. Their values are here. Together with accumulated depreciation, and we know that it's a negative. Well, what's that? Contra equipment item. So let's make sure that it is a negative value, so that we can easily calculate the total assets. By simply summing them up. Okay, so we got a bottom number item. Asset 21,910. The next is liabilities and equity. Checking whether assets is the total assets is the same as liabilities and equity. Sum of the two. Okay, liabilities. We have them here. Liabilities. We have them here. Liabilities is under the larger group of liabilities and equity. So let's make an indent. And these are all sub-liability items. So let's make double indent. Their values are here. And I will double click, double across, so that our liability total is some of the all numbers. And then we have equity. Do you have the number? Yes, you do. Here is the ending owner's capital balance. So you add the two up, then you have liabilities and equity total, which is sum of the liability and equity. And we confirm that the two figures are the same, right? Okay, so we began this chapter beginning from adjusting entries, right? And then we've posted these adjusting entries onto the general ledger. And then based on the general ledger ending balances, we've prepared adjusted trial balance. And this adjusted trial balance was our basis of the preparation of the statements. Okay, well done. Good job, guys. And as you remember, we can find the actual real-world examples of the financial statements from the SEC's website. Again, if you don't remember, www.sec.gov, go to the SEC website and click the company filings and type in a ticker symbol of any company that you would like to have a look at. For example, AA is the ticker symbol for Alcoa Group. I thought that it is American Airline. Maybe not. Okay, so Alcoa Group, which is a aluminum mining company. You click it, and then you will see on the right-hand side of the screen 10Ks and 10Qs, and they are the reports that you can find financial statements. For example, you open the most up-to-date annual report 10K. Okay, let's click this file. Then we can have a look at the formal form of the file, but I'm more interested in the tabular form of the statements. So let's click interactive data. And then let's see the financial statements of this aluminum company. Financial statements, for example, income statement or statement of consolidated operations. You can see that these numbers are in millions. Alcoa made sales revenue of 9 billion for the past year, which is sort of shrinking due to, well, this is end of 2020. So over the year 2020, if you remember, there was the COVID pandemic. So as a result, it has been shrunken. After taking out all of the expenses such as cost of goods sold, selling, general, administrative, and other expenses such as marketing and research and development expenses, R&D, and the like, then your total cost is about 9 billion, and your net income is actually, it is net loss. So the company has lost its money, 14 billion. Please keep this number in mind. When you prepare the income statement, the number is the basis of your preparation of the owner's equity statement, right here, here, and here. Let's see if it's the case with Alcoa. 40 negative number is, can you find it at the statement of consolidated equity? 14,000. Its beginning balance or ending balance of the last year is given here, right? From the beginning, you add up, right? Net income, which is unfortunately loss, right? And then with some other adjustments that you will study if you take one of the next level of financial accounting classes, with adjustments of them, you have your netting equity size, which is 5.0 billion. At the year beginning, your equity size was, Alcoa's equity size was 5.8 billion. So in total, the company's equity is shrinking. Sad story, right? And please pay attention to this number, 5 billion, 16 million. This is the number that you will see in the, balance sheet, as equity, right? Again, your balance sheet, you will see 50, 16. You will see 50, 16 total equity, right? Its total asset is 14 billion, 0.8 of total liabilities and equity, of total assets the same, right? As a result of your shrunken total equity, right? Okay, please have a look at the numbers for of the financial statements of the companies that you are interested in, and please make yourself be familiar with these financial statements. Okay.